I'm David Harrell, editor of Morningstar Dividend Investor Newsletter, and I'm here today with Dan Lefkovitz, who is a strategist with Morningstar's Indexes Group. Dan, thanks for being here.
Thanks so much for having me, David.
Okay, could you tell me a little about your role with the Indexes team?
Sure. So I produce research that's focused on Morningstar's proprietary range of indexes across asset class, so stocks, bonds, multi-asset, and investment type. So traditional market exposure indexes, strategic beta, styles, dividends, ESG, et cetera.
Okay, great. Now, you recently released a research report on the appeal of dividend growth investing, especially in today's market where we have high inflation, rising interest rates, and an incredible amount of day-to-day volatility, at least within the U.S. equity market. Now, in your report, you made a number of comparisons using three of the Morningstar indexes. I believe it was U.S. dividend growth, the U.S. market index, and the U.S. high dividend yield index. Can you tell me a little bit about those three indexes, their construction, and maybe the types of companies we find in each of them?
Sure. So the Morningstar U.S. Dividend Growth Index includes companies that have grown their payouts to shareholders for 5 consecutive years, with some screens for dividend durability. It's currently at about 420 stocks, and it weights by available dividends. Okay. The Morningstar U.S. Market Index is our broad gauge of the equity market across large, mid, and small cap stocks. It's currently at about 1,600 companies, and it is market capitalization weighted. Okay. And then the high dividend index is the higher yielding half of the U.S. equity market. Okay. And it is also market capitalization weighted. It's currently at about 440 stocks.
Okay, and so there's clearly some overlap among those three indexes. Yeah. So stocks could appear literally in all three.
Absolutely.
So it could be, okay, got it. All right. So within your report, one thing you were noting was that sort of the types of firms in the dividend growth index, the companies that, as you say, are able to increase their dividends on an annual basis for at least five consecutive years, tend to be well positioned. And you also noted that of the three indexes, the dividend growth index was the one with the highest percentage of constituents that had a wide economic moat rating from Morningstar analysts, correct?
Yeah, that's right. If you look at companies that are consistently growing their shareholder payouts, they tend to be really well positioned. They tend to have competitive advantages or economic moats in Morningstar equity research parlance. And that's relevant to inflation because companies that have moats around their businesses are better able to pass along price increases than a no-moat business.
So that they have pricing power, which is a good thing to have in today's environment. Got it. So Dan, when you plotted sort of the overall investment style of these three indexes, you found that the high yield was the furthest to the left on the style box in the value column. The dividend growth was a little to the right of that, and then the overall U.S. market was closest to the growth side of the spectrum, correct?
That's right. If you look at the kinds of companies that have high dividend yields, they tend to be in sort of value sectors like industrials, financials, energy, basic materials. Those kind of companies are paying out a very high portion of their earnings in the form of dividends. Dividend growth has a value tilt as well, but it's much closer to the core section of the style box than that high yield segment of the market. So Apple and Microsoft are both in our dividend growth index. You tend to see more technology companies than the high yield segment. But if you look at the U.S. equity market overall, the extent to which technology and technology-oriented stocks have dominated for so many years, the overall market is quite growth-leaning at this point. And if you look at some of the biggest names in the U.S. market, mega caps like Amazon and Alphabet, Tesla, Meta, these stocks don't pay dividends at all.
Right. So what did you see when you looked at the volatility of those returns as measured by standard deviation?
Yeah, so our dividend growth index is less volatile, has been less volatile than both the overall market as well as the high yield segment. So it hasn't risen as high during good times. It hasn't fallen as far during bad times. That's consistent with what you'd expect from its high quality sort of orientation.
Okay, so less current income than a high yield strategy, but a little more consistent performance.
That's right. A lot of investors use dividend growth strategies as sort of a core defensive way of participating in the equity market, less about income, more about long-term total return.
Got it. So in your report, you were also looking at, I think you said you use dividend growth as sort of a lens for different sectors or market, different industries. And you were noting some that were sort of on the rise or some that were less well positioned. I was wondering if you could highlight some of those, and then maybe for some of those that are sort of better positioned today, maybe give us some names of individual stocks in there, particularly ones that are trading at discounts to their current fair value.
Yeah, so I think dividend growth is a really interesting lens into where in the market you see improving and declining fortunes. So some of the areas where our dividend growth index is overweight relative to the market as well as to the high yield section are financials, diversified banks, as well as regional banks. So I'd cite names like Citigroup and Truist Financial. Within the healthcare space, you've got pharma companies like Merck, medical device companies like Medtronic. Within industrials, aerospace and defense, a name like Raytheon, I'd mention, Emerson Electric and Cummins, and then semiconductors, which used to be sort of a cyclical area and I think is becoming more of a secular growth story. So names like Skyworks and Lam Research and Texas Instruments.
Great, great. Well, Dan, thanks for sharing your insights. Great having you here.
Thanks, David.